confidence. Here's where I want to talk about individual investors' confidence. And I think a lot of people's confidence has been rattled over the past year and over the past month. Last year, coming out of 2021, such a great year for the stock market, for individual investors, growing portfolios. We had a snag in 2022. We came into an environment, higher inflation, causing central banks around the world to raise interest rates and raise them in a hurry. And that obviously was a recipe for, I don't want to say disaster because it wasn't a disaster, but it was obviously something that the stock market didn't like, couldn't get past, at least initially. And so the S&P 500 last year lost roughly 22%, or it was off 22% from the highs. So coming into this year, there were a lot of bargains. Individual investors got excited again about some of the growth ideas. We heard a lot about things such as artificial intelligence and all the opportunities in the tech space. And then what happens? We get hit with a banking crisis in the US. We've seen crises in the US before, obviously, some smaller crises, but the big one was back in 2008. We had the big financial crisis when that was a lot different. That was more in the mortgage area or the lending area for big banks. They were lending money to individuals that really shouldn't have been borrowing money, and they're out buying homes. And so when things started to fall apart, we had a very big issue in the US, and that was a lot deeper than the crisis we're going through currently. But having said all of that, individual investors have seen their confidence fall. I've talked to a number of people that, they've said to me, Al, I'm going to hang on just another few months. I want to see where this banking issue goes. And if it starts to get worse, I'm just going to move to cash. And to me, I think that's the wrong thing to do. As I've said on this show, you can never time markets. A lot of confidence has to do with volatility. So with that in mind, I want to pull up a chart of the VIX, which is the index for volatility. And you can see here that in the month of March, how high volatility spiked. And you can see also as fast as it spiked, it's coming down just as fast. So when people lose confidence, they're losing it because volatility in the stock market is at high levels. I actually believe, if I'm not mistaken, the VIX got as high one day for at least a short period of time to almost 30. And that's when people look at volatility and take a step back and say, oh boy, that's high. Anything under 20 tends to be less volatility, and investors are more comfortable. Anything above 30, investors can and usually begin to panic. So confidence is something I think is important. And when you're calling into question banks, which are the bloodline, as I've said many times, of any economy, and you're wondering if your deposits are safe, if your money is safe, can you make payroll? Can you pay your employees? Do you have money there to take out, to spend, to buy groceries, to fuel your car, fill up your car at the gas station? That's when confidence is eroding. Now, I believe confidence will come back. I think this banking crisis is well on its way to being resolved. I don't think it will spread. I don't think there's a contagion here. I also believe that inflation is going to continue to fall. I think we've seen it down from 9% to 6% in the US, from 8% to 5.2% in Canada. And that's going to help build back confidence. I think once people realize that the economy is healthy, resilient, and doing well, I think this will lead to people's confidence coming back, people's confidence in investing coming back. And in general, I think it's going to cause a happier environment here in our country and in the US.